where can they start with like the bare bones basics to not be overwhelmed with everything?
So the likelihood that they're going to actually lose their Bitcoin if they do self-custody in many cases is actually higher than if they just left it on an institution.
What's the very first thing a widow or widower or just an inheritor of an estate should do if they come across Bitcoin?
And I'm not trying to scare anybody by saying this. I'm just giving you the different scenarios.
Can a hacker get access to that?
This is the second reason that people don't like, Bitcoiners especially, don't like the idea of leaving Bitcoin on an institutional platform.
So the exchange or the company, even if it goes under, I mean, if they go under, what happens?
Depending upon the device and who finds it, and if they have the right tools, they might actually be able to extract your private keys from that thing. If they get your seed words, however, they definitely have your Bitcoin.
Welcome. We are back for another episode. Big shout out to all our subscribers. We thank you guys for your support. And if you haven't already subscribed, click that subscribe button, follow button, the like button, wherever you're watching, wherever you're listening. We are on YouTube, we're on Apple, we're on Spotify, or wherever you get your podcasts. And we just appreciate your continued support while we bring you this content. And today we have a returning guest who gave us some amazing insights on Bitcoin and the whole world of Bitcoin last time he was on with us. He's the managing director at Swan Private, where he works with high net worth individuals by introducing them to the world of Bitcoin. And he was also previously the host of Cafe Bitcoin, the Cafe Bitcoin podcast. And that's where I became familiar with who he was. And he knows his stuff. We're really happy to have with us once again, Alex Stanczyk. Alex, thanks for being here, man.
You bet. Thanks for having me, Mike.
Yeah. So we were talking, I think, last week, and you said you had chickens. I didn't think you were a guy who had chickens. That's kind of wild. Is that a new thing, or have you been doing that self-farming thing for a while?
Yeah, we've been doing it for about a year now.
Okay.
As with many Bitcoiners, a lot of Bitcoiners are into resilience and homesteading and all those kinds of things. So,
Yeah.
we've been kind of getting after that a little bit. We have a tiny little farm, basically. It's horses, chickens, fruit trees, all that kind of stuff.
Horses. So is that like a full-time job or what? That's a lot of work, no?
Not for me. I don't do the horses. My fiance does the horses, but yeah,
Okay.
it's a lot of work. All that.
Yeah. So, man, I'm glad you're here. And, we talked a lot. We went deep in the weeds last time you were on, just talking about Bitcoin, and I enjoy getting into those conversations. But today I want to just get back to basics. So like Bitcoin can seem really complicated for a lot of people at first. It's not like a legacy financial asset. It's not like a mutual fund. And a good friend of mine, big shout out to Downtown Dan in Phoenix, suggested that we do an episode on like ways surviving spouses or people inheriting estates of a deceased person who is holding Bitcoin can better understand it, and most importantly, like how to access it, how to retrieve it. And so I thought of you when that conversation came up. You're like one of the Bitcoin Jedis out there. You know this stuff on a real academic level. And so, I want you to maybe point some resources to us. I'm a little dark on some of this stuff. Say a widow learns that her husband was a hodler. She didn't know. She finds a wallet with 5, 10, 20 Bitcoin on it. That's a lot of money today, right? I mean, last I looked, we were at 101,000 to date, the day we're recording this. So like, what's the very first thing a widow or widower or just an inheritor of an estate should do if they come across Bitcoin?
Yeah, so that's a great question. I'm going to start out by saying that particular scenario where a widow finds a wallet with a bunch of Bitcoin on it, I think is probably not super common.
Okay.
Because, for example, in your scenario, if the person who bought the Bitcoin or holds the Bitcoin didn't actually tell his spouse about the Bitcoin, I think it might actually be unlikely that the spouse would figure out what it is to begin with. So, just for example, let's say a guy got some Bitcoin and we'll talk about custody in different ways people store things, but just as an example, a really common hardware wallet is called a Trezor. So let's say the guy has a Trezor and it's just in his stuff, in his office or something like that. So the widow might find it, but I mean, it looks like a USB drive, really, to anybody who doesn't know exactly what it is they're looking at. So the chances that they're going to figure out what that is are pretty low. And even if they took it and, for example, plugged it into their laptop, it would recognize the device, but then she'd try to look at it like a USB drive, and she would have no idea, right? And the odds that her thinking that maybe it's something valuable is pretty small. So what I would suggest to, those of you who are people who have bought Bitcoin is, and then we talk about this kind of stuff with our clients at Swan all the time, because inheritance planning with Bitcoin is a really big deal. We have these kind of conversations often where clients will come to us and say, hey, I understand Bitcoin. I like Bitcoin. I own a lot of Bitcoin. My spouse doesn't understand it. My heirs don't understand it. And frankly, they don't care. And they're unlikely in many cases to care unless you're gone, if they know what it is. And this is where it comes into, I can see reasons why a person might not tell their spouse that they have all this Bitcoin. But at the same time, I would highly recommend, there's kind of three pillars when it comes to inheritance planning in Bitcoin. The first is your legal pillar. And by legal, I mean in meat space in the world, it is recommended that you take legal steps or create legal structures, or at least create protocols that can be followed by your heirs. So what does that mean? Maybe you write a will. In the will, maybe you leave instructions. In those instructions, maybe you indicate where this device is. Maybe you indicate where your seed words are. Maybe you give some guidance, like don't share these seed words with anybody.
Yeah.
Right?
Yeah.
Maybe you say, okay, go in the safe in this corner. You're going to find this little black device. It should say Trezor on it. That's my hardware wallet. Go call my buddy Brian, who's also a Bitcoiner whom I trust. If you trust that person, and again, this is one of those things where you better be sure you trust that person, because there's a knowledge gap, right? And whenever there's a knowledge gap, that can be exploited. So you want to have that in place. Other things you might want to do is you might want to have a trust. This is something, if you live in America, you might want to have a trust in place as a legal structure that helps you deal with probate instead of having the state take some large chunk up to half of your estate. Maybe you have a trust. Now, if you don't have that much to lose, maybe it doesn't matter as much. But with Bitcoin, it's quite possible that that's going to be worth a lot in the coming years, right? So those are all things to take seriously. So you have your legal structure, your legal pillar, I should say. Then you have your custody pillar. And with custody, now you have to start figuring out how do I preserve the security of my Bitcoin, right? And there's three ways today that most people do it. The first is institutional custody. That's if you're leaving it on a platform like Coinbase or Swan or NYDIG or Fidelity or any one of these different types of platforms. So what do we call institutional custody? A lot of traditional Bitcoiners don't like institutional custody because there's a saying, not your keys, not your cheese. If you don't have the custody of your keys, and it's not your Bitcoin, because historically speaking, there have been a lot of failures of institutions. A lot of people have lost a lot of Bitcoin.
Yeah.
Right. So this is why Bitcoiners feel this way, and they're not wrong. Also, I would add to that, though, that as human beings, we're not really accustomed to custodying our own assets. Like if you think about it, for the last couple hundred years, banks have held their money. Brokerages hold our stocks and bonds and whatever. And IRA custodians hold our retirement account assets. And it's been this way for a really long time. There are a lot of people who are super uncomfortable with doing their own custody. These are not dumb people. I find that Bitcoiners are very hard on these people. And look, I get it. As a Bitcoiner, I also believe in self-custody. I do self-custody, and I'm comfortable with it. What I'm saying is there are a lot of people who are not. And Bitcoiners are really kind of hard on these folks. And I think it's coming from a good place, right? They don't want them to lose their
Yeah.
Bitcoin. But at the same time, people are just terrified of it. And there are some people who, in my opinion, doing self-custody actually increases the risk that you're going to lose it versus leaving it on an institution. Why? Well, something like 80% of investable capital is controlled by people over the age of 65. Many of the Bitcoin folks call them boomers, right? Well, boomers, A, have all the money, and B, aren't really good with technology in many cases. And so the likelihood that they're going to actually lose their Bitcoin if they do self-custody in many cases is actually higher than if they just left it on an institution or with an institution. Okay, so, and again, I'm not advocating for it. I'm just telling you this is the reality, and there are many smart people who just are not comfortable with it. I'll give you an example. One of my clients, very wealthy guy, owns several businesses. He's incredibly intelligent. And he goes to me and goes, Alex, I lose my car keys every 3 to 6 months. There is no way I'm going to do custody of my own Bitcoin. And it's like, look, I get it. Like, I try to encourage him to do custody of his own Bitcoin, but he's just not okay with it.
Yeah.
Right? So that's one thing to consider. The second thing to consider is, or the second way to do custody, I should say, is self-custody, right, with what we call single signature protection of your keys. So what does that mean? So single sig, this is an example of what some people call a hardware wallet, right? This is a Blockstream Jade. Very standard hardware wallet. Blockstream is a very reputable company. Owned by Adam Back. He's one of the only guys that's actually mentioned in the Bitcoin white paper. Anyway, in the industry, this is referred to oftentimes as a wallet. I don't like that word because it is confusing for people, in my opinion. Why? Because what do you put in your wallet? Your money, right?
Right.
It sits in your wallet. The problem with that is the Bitcoin doesn't actually reside in this thing. It resides on the blockchain. Right? So for people who don't understand this, I'm going to give you some basics here. What is the blockchain? The blockchain is a series of, each block contains a bunch of transactions. All the transactions have a from address and a to address. So where the Bitcoin's coming from, where the Bitcoin's going to. Okay? There's a new block every 10 minutes, right? So the Bitcoin actually lives on that blockchain, which is a ledger of all transactions that's ever occurred in Bitcoin going all the way back to block one, the Genesis block. Okay? There's hundreds of thousands of copies of this ledger, which have been downloaded all around the world, sitting on computers all around the world, and in fact on satellites today. And this is the reason why Bitcoin is so decentralized and cannot be stopped, by the way. But the Bitcoin lives there. What this thing does is it stores the keys that gives you the authority to move the Bitcoin from one address to another on the blockchain. So another way to think about this is it's kind of like a magic pen if you're older, a pen that has the authority to sign a check to tell the bank to move the funds from one account to another. Right? Single signature. Now, something that's becoming more and more common, especially with larger and larger piles of Bitcoin, is what we call multi-signature or a multi-sig wallet, right? Multi-sig. Some of these are collaborative, some of these are not. So it's possible for a person to set up a multi-sig on their own. A lot of the solutions today that a lot of people use are what we call collaborative multi-sig, meaning there's a company like Swan or Casa, for example, or I think Unchained does one too, where the company will hold a key or keys, and then the user holds X number of keys, and then it's a multi-signature solution. So one way to think of it is like this. Well, the reason we say multi-sig is it requires more than one signature to move the Bitcoin. So one way to think of this is this. Let's say we start a company, Mike. You're the president. I'm the treasurer. We have another person who's the secretary. And it's kind of like we're the three potential signers, and we tell the bank it requires 2 signatures minimum to move the Bitcoin.
Right.
That's a multi. So what does this do? Well, it protects you against yourself, and it also protects you against the compromise of one of these things. So, for example, let's say we set up a multisig and it consists of 3 keys. And we're going to talk about a collaborative as an example. Mm-hmm. Yeah, 3 keys. In this case, Swan, let's talk about Swan's multisig. Swan has 1 key. You have 2 of these. So there's 3 keys total. It requires 2 keys to move the Bitcoin. Once it is set up, you take these 2 and you separate them physically. They never come back together into the same physical space. Like one is at your brother's house or your sister's house, or you know what a lot of people do is that they will create an inheritance plan mm-hmm. where they'll take the second key and they'll give it to a trustee of a trust, or they'll give it to their attorney to put in the safe at the attorney's office, or something along those lines. And what that does is that if one of these things become compromised, you don't lose all your Bitcoin. You see, if you're doing just a single SIG setup and somebody actually gets your physical device, depending upon the device and who finds it and if they have the right tools, they might actually be able to extract your private keys from that thing. It's pretty hard, and I'm going to say it's super probably uncommon, and under most cases, if somebody finds your thing, it should be okay. If they get your seed words, however, they definitely have your Bitcoin because your seed words are your backup. Okay, so for example, let's go back. From multisig, we're going to back up a minute. We're going to talk about single sig again. You have one device, one signature. When you fire this thing up for the very first time, it's going to give you a list of words. We call this a seed phrase. It's usually about 12 words to 24 words, depends on how you set it up, right?
Yeah.
It's going to ask you to write those words down. You have to write them down in a specific order. My recommendation is once you write them down on paper, eventually you transfer that to metal, onto a metal plate, either titanium or steel. Why? Because your paper could get wet, get caught in a fire, right? And many different things can happen to it. But the important part is, let's say I wrote the 12 words down on a sheet of paper on a notebook and I left it in my office. And then I have a housekeeper come and clean the house and they see that. They could snap a picture of it with their phone and leave and go buy one of these, initialize it using my seed words and sweep my Bitcoin from my wallet to theirs. Mm-hmm. And I would never know until I logged in and looked at my balance and saw it was 0.
Yeah.
Right?
Yeah.
So my point is, with the multisig, is that protects you against those kind of scenarios. So I'm not trying to scare anybody by saying this. I'm just giving you the different scenarios. Like if you, with a single sig, the things you need to think about are A, am I able to secure this safely? Am I able to secure the seed words safely? Right? Do I have a place I can put them that I feel is safe, that's nobody's going to get to it, whatever the case may be? I mean, some people go really elaborate, right? Well, they'll take their seed words, put it on a titanium plate, put it in a time capsule, like a waterproof, airtight container, and get one of those GPS tools and hike up into the mountains and bury it somewhere and mark the spot, right? Like, people do this kind of stuff. So, by the way, if you're hiking and you find a time capsule, it's got a metal plate in it, congratulations, you might be rich. But, you got to think about your own physical security situation. Some people live in a situation where it's just not, they don't feel that it's physically secure.
Yeah.
Right? I'll give you an example. One of my clients who recently upgraded from single sig to multisig, very wealthy guy, retired, living in Colombia, right? One of his buddies, this didn't happen to him, but one of his friends went on a date with a pretty Colombian girl that he met, right? And they roofied him and basically got all his stuff. They took his phone, they took his laptop, took his Trezor, took all of his things, cleaned him out, like emptied his Bitcoin wallets, right?
Wow.
Yeah. So I'm not saying that's a common thing, but these are just different kind of threat vectors to think about. Like, how secure is your home? Do you live in a neighborhood that you have to worry about stuff, maybe? Right? Those kind of things. So what the multisig does in that case is that if one of these things becomes compromised, you simply go get the other one, you bring it to log in, you'd use Swan's collaborative key, and you can do this with other services. It doesn't have to be Swan, but you use Swan's collaborative key. Now we have two keys, and we move the Bitcoin to a new secure location. The thief has got your other set of keys or your other seed phrase, but they can do nothing with it because it requires two or more signatures. I'll stop there and let you ask questions if you have any.
No, that's great. That's a really good explanation, and just appreciate you giving so much detail to that. And there's obviously like a trust factor here with Bitcoin because there is no middleman, there's no FDIC, there's no defined fiduciary aspect that you might find with legacy finance. But how does that tie into multisig? So you have a multisig set up with Swan or with some other exchange or some place that provides that service. It's secure because you have the other half of those keys. So the exchange or the company, even if it goes under, I mean, if they go under, what happens?
Yeah, good.
There's always a concern of exchanges going under, and you know we've heard it, we've seen that happen, right? We've seen this in the past already, right?
Well, so it does happen, right? It's happened as recently as a couple of years ago with FTX is one of the most famous ones, right? So good questions. I'm glad you asked that. So a couple of things when it comes to this. In this example that I use, we have a 3-key multisig. It requires 2 keys to move the Bitcoin, and the client has the 2 keys. So in this case, Swan would only have 1 key. So what does that do? It does a couple of different things. Number one, Swan can't do anything with your Bitcoin. Swan can't unilaterally move your Bitcoin. Also, it makes your Bitcoin immune to government confiscation. See, this is the second reason that people don't like, Bitcoiners especially, don't like the idea of leaving Bitcoin on an institutional platform, as if the government did like a 6102 kind of gold confiscation order, right? Even if the government came and said, hey, give us the Bitcoin, Swan could not comply because there's only 1 key, right? So moving on from that, but to answer your other question is that if Swan went away, when the thing was created for the first time, it also creates what's called this descriptor file. And the descriptor file is kind of like a blueprint for the Bitcoin. You can use the descriptor file plus your 2 devices, and you can recreate that multi-sig wallet using some standard Bitcoin core software. Like Spectre is one good example of like off-the-shelf open source software that you can just recreate the multi-sig, and if you have 2 keys, you can move it yourself. So in the event that Swan disappeared, that's what you would do.
Okay.
With descriptor file, you take your 2 devices, you'd go load it up onto Spectre, and then you'd move it to a different address or a new multisig.
Okay.
That's what you wanted to do. And you could do the multisig later. You could even move it to a single sig temporarily just to get it to where you felt it was safe, and then go set up a new multisig and move it there. It's a good question, and anybody who's doing any of these things needs to be thinking of like you just mentioned, Mike, because being able to restore and recover is super important. If you do a single signature wallet, my recommendation is get 2 of them, right? You set one up, learn how it works, get your seed words, all that other kind of stuff, right?
Yeah.
You could even set up the second one and learn how to send Bitcoin back and forth to each wallet. You can send it to yourself essentially just into 2 different wallets. And what I would do is that you have all the Bitcoin in one wallet, right? Completely wipe the other wallet, use your seed phrase to restore the wallet just so you know how to get back to it. If you can't restore the wallet, my recommendation is learn how to do that, because that's the way that you recover in the event that you actually lose the device, is you have a seed phrase that you can go get that and get your Bitcoin back or get access to your Bitcoin back.
Okay. That's and that descriptor file, can a hacker get access to that in some way? Can they get that descriptor file and hack your multisig?
If you did, it won't matter. Okay, because you can't do anything with the descriptor file alone. You need the descriptor file and the 2 keys.
Okay.
Okay, so, or at least you need 2 of the 3 keys. So you could actually take the descriptor file, and if you wanted, unlike your seed phrase, you should never take a picture of your seed phrase. There should be no digital copy of it. You should never upload your seed phrases to the cloud. You should never put them on notepad documents on your computer. Never store them anywhere digitally. That's a physical thing only. If you store them digitally, there is a fair chance that at some point a hacker might get access to it, and any hacker who's looking at a list of 12 words is going to immediately go, oh, that's Bitcoin.
Yeah.
And they're going to fire up a wallet. They're going to initialize it with your seed phrase. They're going to take your Bitcoin.
Yep.
Right?
And there's no recourse after that.
There's nothing you can do. You know what? One of my clients recently called me, and he just casually said that he took a picture of his seed phrase. And I'm like, you did what? He's like, yeah, I took a picture of it. I'm like, go check the wallet right now. And he did. He's like, okay, it's good. Still got all my Bitcoin there. And I'm like, okay, we need to move that immediately to a new wallet. And he's like, well, why? I'm like, well, do you have, like your Google backup for your pictures on? He's like, yeah. And I said, well, that seed phrase is now in the cloud in Google. And, at any moment, a hacker who compromised his Google account could get a hold of that. Or even somebody working for Google, for example, maybe. Yeah. Right? Mm-hmm. And it was worth a lot of money. So thankfully he was able to move it to a new one, and we were able to get it off of there.
So for that person watching today who just can't wrap their heads around Bitcoin and what it is exactly, how it operates, I get it. You and I have had conversations about this, but what are some really basic resources that they can look at to gain a better understanding? I've tried to point people to Satoshi's white paper. There's that Michael Saylor episode on Tucker Carlson. I don't know if you ever saw that from like 2000, I want to say 18. It's like a 3-hour discourse on Bitcoin. And I mean, I love it, but I just feel like it's some of the people I've shared that with, it was just too much information. So where can they start with like the bare bones basics to not be overwhelmed with everything?
Sure. When I'm talking to somebody who's new to Bitcoin, I want to start with what they know and what they don't know. So, for example, I'll ask them questions about, how much do they understand about money itself. I'm not talking about making money. I'm not talking about investing money. I'm talking about, do you actually know what money is? Like, what is the purpose of it? How does it work? Where does it come from? All those kinds of things. Because most people don't know that basic thing. And that's a pretty important thing to understand, because Bitcoin is a solution for a lot of problems. But if you don't know the problem, then it's hard to go, oh, Bitcoin obviously is the solution.
Right.
So that's oftentimes where I'll start. I recommend, if somebody doesn't really understand the economic problem, then I would recommend go figure that part out first. And one of the best ways to do that, in my opinion, is there's this new video by a guy by the name of Joe Bryan. And Joe created this thing called What is the Problem? I'm looking it up right now. If you go look at, let's see, it's called Sats versus Fiat. So SATS vs Fiat, FIAT, on Twitter, at Sats versus Fiat. And there's a video. It's 39 minutes long. Mm-hmm. In my opinion, it is one of the best summary videos on the effects of what we call fiat money. Fiat money is money created by the government, issued by the government, and secondary, tertiary, fourth order, and fifth order effects in the real world than anything I've ever seen. It's kind of like, if you want to get a PhD level understanding of economics in 39 minutes without spending 8 years and $200,000, I'll watch this video.
Okay.
It will very specifically define for you what the issue and the problem is. It will explain to you why the prices of things are rising. It will explain to you why all kinds of things are happening at second, third, fourth, and so on order effects of the government just printing money. Because we started out in the United States of America, took 200 years before we printed our first $1 trillion. We're now printing $1.3 trillion every 90 days. Mm-hmm. And what this has caused is inflation. What is inflation? The prices are running away.
Yeah.
Right? Which causes everybody to run on the hamster wheel, chasing, making much money. We run faster and faster and faster for longer and longer and longer and harder. Like, it used to be a family could have one person out there working an income, earning an income, and another person was taking care of the house and the kids, and you had a summer cottage, and it was just, you had all these lifestyle things that don't exist today.
Yeah.
Now you have two people working. Sometimes they're both working two jobs, and people are still running faster and faster for longer and longer trying to make ends meet because prices keep running away. The second order effect of that is that people now invest in all kinds of things that sometimes they no longer, many of them don't even want these things or even understand them, but they understand they have to invest in them in order to stay ahead of inflation. Right, which has caused, I would argue, since 1971, since we removed gold backing from the U.S. dollar, now the government can print unlimited amounts of money. I would argue we've been doing it for 60 years. Where we've got this like manipulated, forced investment pattern where people are buying stocks and bonds and real estate and all this stuff.
Yeah.
That they might not buy otherwise. Like if they had some other medium, like if their money wasn't basically becoming worthless very quickly, they might not buy all that stuff.
Mm-hmm.
What if there was a money that was absolutely finite, that would always go up in purchasing power relative to everything else? Right. So this is the reason why people are starting to buy Bitcoin more and more and more nowadays, because people are starting to realize this.
Yeah, and that's a really good way to look at it, because I understand the problem. I know what you're speaking of, but if you don't convey that to somebody who's poking around asking those questions, then they're not going to see a real use case for it. They'll be like, well, I'll just invest in the stock market, or I'll just buy a mutual fund or an ETF. I never really thought of it that way. That's a great way to put it, man.
Well, people say, I see this all the time. People are like, well, what's the point of Bitcoin? What purpose does it serve? And it's like, well, what purpose does stocks serve, or bonds, or real estate, or diamonds, or art, or any other thing that people buy to store value in? Purpose is the same. Is that you're trying to get an asset that is going to grow in value faster than the rate of inflation, so that you're not basically going backwards your whole life. Yeah. Right? Because a 2% target rate of inflation over 50 years will take half your wealth.
Yeah.
A lot of people don't realize that, but it's taking half your wealth in the typical lifespan of a working person, right?
Yeah.
So Bitcoin's just like all those other things currently, only it performs better than everything. It's the fastest horse in the race.
Yeah.
And that's no longer conjecture. Look at what's happening. You've got sovereign wealth funds buying it. You've got the largest financial institutions in the world buying it. The largest insurance companies buying it. You have countries buying it. You have states in the United States. There's something like 12 states right now that are in some stage of approving a strategic Bitcoin reserve for their state treasury. The new president of the United States has been talking about it. There are sitting United States Congress people who are talking about doing this. They've already introduced bills, right?
Yeah.
So you've got Larry Fink was just at Davos a week or two ago, whatever. He was sitting on a panel talking to a couple of other people about it, and he was like, "Yeah, I just had this conversation with one of the largest sovereign wealth funds in the world, and they're asking me, should they do how much of an allocation should they do the Bitcoin? Should it be like 2%, 4%? Like, what should it be?" The fascinating part to me, not that they asked how much they should allocate, it's that they're not asking if they should buy Bitcoin. They're asking how much to allocate. This is a massive mental shift. And it's a huge signal.
Yeah. And even from the last time that we had you on, so much has changed even from then. I think it's been maybe a year, but there's just so much that has happened that more countries are buying it, and you're seeing it end up in, there's talk of the sovereign wealth fund, even here in America. It is the fastest horse in the race by far, and it's just gaining more and more traction. I can't wait the next time we have you on, what we'll be discussing. We're going there, though. We're going there. I know the answer to this, but I want you to weigh in. Why should people not put their keys or their hard wallet in a safety deposit box? Because I've heard this question come up many times. Tell us why, Alex.
Yeah, I mean, look, I heard one of my clients told me this the other day, and I think he's really right on. Darren, if you listen to this podcast, kudos for you, man. He goes to me, he goes, Alex, there's no solutions, there's only trade-offs. And I've been thinking about that ever since, and I think he's right. Like, putting a copy of your seed phrase in a safety deposit box, depending upon whose safety deposit box it is, there's trade-offs to that. You don't have to keep it in your house. You don't have to keep it at your brother's house. But, if it's with a bank, they have access to it. If it's with a private safety deposit box company, they have access to it. And people might say, well, they'd never go look at it. Really? Mm-hmm. Again, like, did you know that I think it was in 1933 when the confiscation for gold order was the executive order? I think it was 6102. At the same time, they passed another executive order that basically said you could not open a safety deposit box unless in the presence of an agent of the IRS.
Really?
Yeah.
That's crazy. I didn't know that.
Yeah. So, I mean, right?
Yeah.
So it's like if you think that's safe, I would say maybe it's not. Maybe consider a different place. And there's a lot of people who are like, that's ridiculous. Okay. There's just trade-offs, you know what I mean? Like not everybody considers different things to have the same level of threat. So I guess an individual person has to figure out what's the probability that something like this might unfold and what are the better options. Maybe if you have enough means, maybe your safety deposit box is in a Swiss bank instead of a U.S. bank.
So how can users protect themselves against phishing attacks related to Bitcoin? Any things to look out for specifically?
Yeah, look, basic stuff. There's a couple of like super common attack vectors. Phishing attacks is super common. By now, everybody should know you don't click on anything, right? If you get an email even from Swan, right? Like whatever the email says, unless it's the login link and you initiated the login, right? Like don't click links. Go directly to the website. If you have Charles Schwab sends you an email and they're like, hey, come here to get this report, go directly to the website. That's the first thing. Don't be clicking on stuff if you don't know what it is. If you get an email from someone you don't know, definitely don't click on it. Don't open attachments. Don't open PDFs. Don't look at pictures. Don't click on links. All of those things. I mean, you can embed executable programs in a PDF or a Word document, right? So, like, don't open any files and don't click any links. Now, here's a little trick. A lot of people don't know. You can hover over a link with your mouse, and you can right-click it and copy it. And then you just paste it into a notepad. And if you think it's coming from Schwab, but it's coming from NigerianPrince.com, don't click it.
Right.
So that's a super common attack vector. Another common attack vector now, and this is the reason why this particular thing I'm about to explain has become super common, is that, again, a huge amount of wealth is controlled by people over the age of 65, right? You've got generations of kids growing up nowadays. All they've ever known is the world of the internet and technology and computers and games and all that stuff. Like they're immersed in it from birth, right? So they navigate technology like they don't even have to think about it. It's like breathing to them, right? So there's a huge disparity of knowledge on how technology works there. It's a huge asymmetry of information, right? And that's being exploited and used in social engineering attacks on people. So what does that mean? Well, as you know, in my opinion, this model where we collect people's information in databases and centralized stores of information is really not the smartest way to do security. Why? Because those databases get compromised. And going back probably starting 20 years ago, you started hearing all these huge hacks, right? Where I think one of the biggest ones might have been either TransUnion. It was one of the big three credit reporting agencies. They lost hundreds of millions of records, right? And then you have all these ones that have followed that. You got the Comcast hack. You got all these other ones, right? What are they doing? Well, they're collecting people's information. What do they do with that? Well, they sell it on the dark web. Not only that, they can take existing databases and fortify the data with a new hack. Like, okay, this one hack, they got everybody's email. Oh, this other hack, now they got people's phone number. This other hack, they've got, other backup emails or addresses or social security numbers or whatever it is. And they continuously are having better and better information. So how can this be used? Well, how has this been used? In the Bitcoin ecosystem, it's been used by these young hackers who get a hold of these lists and they do social engineering attacks on people. So, for example, let's pretend you're a senior, Mike. They call you up and they're like, "Hey, Mike, I'm so and so from Google support. I see that your account might have been compromised. We need to do a password reset for you." And you're on the phone, you're like, "Oh no, I can't believe my Google account's compromised. I'm so glad you called me. Thanks for helping me," right? And like, "Okay, we're going to send a little password reset thing to your phone. Just click yes when you see it." They'll send the reset. Boom. If you click yes, they'll have everything in your Google account. They've got your email. They've got access to your photos. They've got access to your files. They can do a search. They can find seed phrases. They can look at your email history and find out that you have an account at Coinbase, for example. Right? They might get access to your common passwords if you've written them down. All kinds of stuff. And this is very common nowadays. People are losing millions and millions and millions of dollars by kids calling them up and getting them to do things that aren't in their best interest.
And see, that's what the beauty is with Bitcoin too, is that somebody might use common passwords for banking or trading accounts or whatever, but the way you access Bitcoin is just so different because you have the seed phrases and you have the PIN to get into the wallet and all those different things that's something that's just separate from all your other assets. And it's secured in such a different and sophisticated way. Even with single sig, that's a great aspect of Bitcoin too. Do you know what I mean?
Yeah, for sure. Like, and having multiple layers of defense, like the layers for example, just like you say, a lot of these accounts will require you to have passwords plus two-factor authentication plus whatever.
Yeah.
And this is all really good. I highly, highly recommend don't use what's called common passwords. Don't use the same password over and over and over again. And people are like, "Well, how the heck do you remember?" Like, passwords nowadays have to have like so many characters and letters and special symbols and all this other kind of stuff. And people are like, "How do you remember any of that?" You know what I mean?
Yeah. Yeah.
And the answer is use a password manager. Right? There's stuff like 1Password, for example, that will not only store passwords to different platforms, but it'll generate passwords for you. And essentially, you just have to remember 1Password to get into your 1Password thing, which will have all the passwords for your different accounts.
Is that another attack vector, though?
Well, it is. I suppose I suppose you could forget your password. That's a possibility. But the alternative to that is you use just 1Password for all your accounts. So maybe your Google email is password 123. You think you're being crafty, right? Yeah. First of all, it's the first password every hacker guesses, right? But second of all, use the same password for your Coinbase account. Well, guess what? They could just, if they know 1Password, they'll just try it on another account. And boom, hey, look at that. I got into Coinbase. And now I'm taking their $2 million worth of Bitcoin. Ha ha ha.
No, there's so many things to consider. And Alex, this has been really helpful, man. I really appreciate you taking the time to hang out with us and just get to the basics. And I'll be bugging you to come back, and just really appreciate you being a Bitcoin evangelist and just sharing your years of wisdom on this front. And just keep at it, man.
Yeah, it's my pleasure, man. Thank you for having me.
Well, that'll do it for this edition. We are out of here. Hit us up at Mikeseapodcast.com. Drop us a comment. We're on YouTube, Spotify, Apple, iHeart, wherever you get your podcasts. And in the comments, tell us how familiar you are with Bitcoin. Do you know anything about Bitcoin? Is it something you're familiar with? Do you own some of it? Do you know anybody that has it? What are your thoughts on it? We'd love to hear from you guys. And until next time, bye, everybody.